All right, everyone, welcome to 2022, and here is my housing markets projection video. Now, Zillow, Realtor.com, Redfin, they've all released their projections and their housing market forecast for 2022. I'm going to link to those below so you can read through them and you can see them, but I've digested these. And one thing I want to get out of the way is there will be no crash. So let's just get that out of the way in case that's what you were hoping for in this video. I think you can find plenty doomsday people out there. As you all know, I'm Jalfonso. I'm a real estate attorney and real estate broker in Miami, Florida, and we handle all things real estate related, and this channel is dedicated to that. I thought I would do this video a little differently than the last time I did it, because last time I did one of these prediction videos, it was more just talking about the market. So I thought the best way for me to approach this will be, I'm going to give you all 3 truths that we now know are going to be evident for this year. All right, I'm going to give you my 3 predictions for the housing market in South Florida. And lastly, I'm going to give you 3 wild cards that I think we need to keep in mind that, could alter everything with regards to my predictions. So with that said, let's jump into the 3 truths. So if there's 3 things that we know for sure now, the first of which is we're going to see interest rates go up in 2022. Now, obviously, given how low we are, that is an absolute truth. The Federal Reserve has said as much. Remember, the Federal Reserve is doing 2 things this year, which will definitely impact interest rates. They have said that they are definitely going to raise the borrowing rate, and they plan on doing 3 rate hikes this year. Additionally, one of the other ways that the Fed pumps money into the economy is they buy mortgage-backed securities from the banks in order to allow the banks. Remember, when you do a loan, the banks resell those loans. The Federal Reserve has been buying those, which has been allowing banks to pump more money into the economy. By the banks giving more loans, more money flows ultimately to consumers, corporations, etc., and the money wheel keeps going. Now, the Fed has said they're going to stop the buying and they're going to increase the interest rates. So we're definitely going to see the average rate that a consumer pays for a mortgage go up this year. Zillow, Realtor.com, Redfin, they all seem to be in agreement that, it's going to hover somewhere around 3.6%. I think that sounds fair, but that's where interest rates, everyone is expecting them to settle by the end of the year. The conventional loan limit in Miami-Dade County is going to be $647,200. Now, remember, compare this with 2021, where it was $548,250. The year before that, it was $510,000. The year before that, it was $484,000. So we basically have the ability with a conventional loan to borrow $200,000 more. If you are a buyer, you need to keep that in mind. And I think the ability for buyers to, with a conventional loan, which is great, because remember, the issue is conventional loans all have, less stringent criteria than the next tier, which is jumbo loans. Remember, jumbo loans tend to be more specific to the actual, smaller banks that are lending the money. Different banks have different programs, and jumbo loans, are typically a little bit harder to get, and they have more, requirements, which means I think with conventional loan limits going up, you're going to just see the prices of homes slowly follow because consumers can borrow more. And typically this tends to affect houses, in the price points around there. So you're going to see homes from $600,000 to $900,000, especially those homes from the $700,000 to $900,000 range are more attainable because borrowers can get a conventional loan and can buy them a little bit easier than they would be able to with a jumbo loan. The third thing that we now know is that foreclosures are not going to be that, ultimate, everybody was expecting foreclosures to flood the market and it would free up all this inventory. And, some people are saying it was going to crash it. Now, if you watched any of my commentary from before, I was stating how I just did not see this happening. And, I think, my prediction has come true, and now it is a truth. If you look at the chart on the board, look how low foreclosure starts are. Look how low the amount of loans in some stage of foreclosure to overall loans are. I mean, they are at all-time lows. And really, when you think about it, it's pretty evident why, right? If homeowners have seen their properties go up by 30%, even an individual who might have owed more than their property was worth now has a little bit of equity, and they're going to move quickly to capitalize and sell that before they let the bank eat up that equity with the default interest rates and additional charges from a foreclosure. So foreclosures are not going to come in, and that means there's going to be less inventory, which means it affects the supply, which means prices should at the very least hold, right? With that said, let's jump into my 3 predictions for the housing market. My first prediction is I think the Miami market is going to see another year of 10% appreciation. Now, according to the Miami Association of Realtors, when it comes to a single family home, the median sales price was $502,750 in November of 2021, compared to November of 2020, where the median sales price was $450,000. I predict that that number is going to go up to $550,000. Remember, earlier in this video, I explained to you how the conventional loan limits increased to $647,200 this year. All right, so just imagine how many more people can get conventional financing at a higher amount. That is only going to slowly drag up the prices of home, as now homes from $600,000 to $900,000 will be the beneficiaries, as those individuals purchasing will not have to go out and get jumbo loan financing, which is typically a little harder to obtain. In addition, the Miami home market, for example, when it comes to single family, only has 2.1 months of inventory. The homes are selling on average, are getting under contract in 20 days. All right, this is much faster than it was before, and inventory at 2 months, that means that if every home on the market were to go under contract and no more homes came on the market in 60 days, we would be out of houses to sell in Miami-Dade County. Typically, you want 6 months of inventory. That means we need inventory to triple right now, which means we would need to go from 2,800 to approximately 7,500 homes in order to have enough homes on the market. That's going to take a while to work itself out, and I just don't see how that happens by the end of the year, especially when you have so many millennials entering the market and you have so many individuals moving to Florida. Miami Association of Realtors has a page that is available to the public. It's called South Florida Market Intel. I'm going to put a link below. They do breakdowns by single family, by condos. They do it by quarter, and it's great data. I love to get in there at least once a month, kind of dig through the data and see what's happening in my market, aside from what I typically go and my searches that I do on the MLS. So I'm going to put the link down below and go look at some data, which I think is very interesting. My second prediction is the Federal Reserve is stating that they are going to do 3 rate hikes this year. My prediction is they're only going to do 1. And I'm going to give you my rationale. We are in a midterm election year. And if there's one thing we've learned on the last couple of years, regardless what side of the aisle you stand on, is everything gets very political. We have become very polarized when it comes to politics. And the reality is the margins in Congress are razor thin, and the parties are going to want to hold on to control. So I don't see how the administration is going to allow the Federal Reserve to taper off all their bond purchasing and raise the rates 3 times. That's going to mean by the time we are in November that the economy is going to be coming to a standstill. Now listen, from an economics perspective, you would probably want that to halt prices, but with the amount of money we've put into the economy, with the debt payments our government has to make, and all the complicated mechanisms, I think they do 1 rate hike in the first 2 quarters of the year, because they said that's what they're going to do, and they're going to have to do it. They'll probably do it like in March, sooner rather than later. But then I think they're going to hold off and make commentary that, you know, they're monitoring the economy. And then if anything, they will do a second rate hike in the end of the year. I just don't see how they do 3, allow the economy to slow down so much and go into midterm elections, because that could mean the balance of power and it could become a weapon. So I think, you know, midterm election year, everybody's going to want a good economy. You typically don't see that much activity in the interest rates. I just don't see how they do it. I think, I'm going out on a limb here, they're only going to do 1 rate hike this year. My third prediction is I think you're going to see projections for the amount of people moving to Florida be beat by the actual numbers that happen, which means we're going to have even more people move to Florida than was predicted. All right. According to Florida's demographic office, we had 360,758 people, net new residents in Florida last year. According to move.org, we had 220,890 people move to Florida. Now, I think we're going to beat these projections, and I think a lot of it has to do with what is going on with these variants, what is going on with all of this. Listen, regardless of what you think of it, what it is, I was having a conversation with someone the other day. They were like, you know, this summer when things are finally to normal, I just don't see how the world goes back to normal. Whatever that means to you. I don't see how quickly this can work itself out. Clearly, we have a lot of work to do, and clearly as a society, we're going to have to all work through this together. But I think if anything we learned in this last December with how much all the cases went up and everything that happened is I myself had never gotten it. I finally got the Rona in December. I saw it firsthand. I saw how quickly it went through everything. And did it change my perspective a little bit? Yeah, just in terms of just watching how quickly it can maneuver. And I just don't see how it happens. And I think a lot of people that have been on the fence, come May of this year, when school years are up, especially for kids, high school and younger, I think those families are going to say, you know what, we've been thinking about it. I think it's time to make a move. And I think you're going to see a lot of families make that move. In addition, you have a large amount of millennials that still have, according to a lot of estimates, there's 45 million millennials that could enter the housing market. Florida's been one of the biggest beneficiaries of relocations. I see a lot more people moving here, and I see us beating all those projections. And that's why, for example, I'm so bullish on my first projection that we are going to have a double-digit increase in prices in South Florida, especially Miami, because I think we're just going to get way more people than we're even anticipating, and we're going to beat those projections. Now that I've given you my 3 truths and my 3 predictions, I'm going to give you the 3 wild cards for the real estate market in 2022. So the first thing that I think you should keep an eye out is government intervention. Now, government intervention, I think, can come at, it could come at us in 2 ways. The first would be at the national level, and the second would be at the local level. Now, at the national level, 2 things, for example, that I think are on the radar and that I think could potentially affect our market is, as you remember, when the president was running for office, they were talking about a tax credit for home buyers, and they floated it around. I've heard 15,000, I've heard 25,000. It was put into some bills. I don't think it's ever actually been passed. I'd have to go back and look at the notes, but my understanding is it still has not passed, and realistically, I don't know what it would do. But I think something like that, I think now that we're in an election year, there's going to be a lot of pressure to maybe do something and to really help, especially first-time home buyers, especially help people in the middle class, with the housing affordability issues. So I think you might see something, get some progress. The reality is, though, as with everything in government, is how long is that going to take? So we'll see that. The other big thing that I think you should keep an eye out, which I think would affect the investment market, but at the same time would help free up some inventory, is there's been a lot of talk about rent control. There's been a lot of talk about rising rent prices. And I think that is something you're going to hear a lot of this year, because I think it's going to become major talking points for some people running for office. Anything starts looking like it's coming down the pipe where they are going to start trying to limit the amount that landlords can charge, or maybe it would be something limited to institutional investors. That would affect a lot of inventory in the market, and it could affect how inventory plays out. My next wild card is the crypto and stock market. As of today, when I'm making this video, the crypto and stock markets have been taking pretty much a pummeling since the beginning of the year. Namely, the tech sector, all the riskier assets have been really getting hit hard. Bitcoin is down to, today when I'm recording this video, it's hovering around 43,000 when it was at a high of 69,000. You've seen a lot of pullback in the stock market on a lot of different of the tech stock. You've seen a large pullback in the stock market on a lot of the tech stocks. One big thing which has been said a lot in, for example, in California, I'm hearing a lot of is, the crypto millionaires. And I think we need to keep an eye on that, because I think if that market is able to recover and stabilize throughout the year, I think you're going to see a lot of people looking to diversify. And I think real estate is a very logical next step for a lot of these people, right? For a lot of these people that, may be overexposed on crypto because, hey, let's face it, they made a lot of money. They may start to decide, well, let me take some of that out and let me position myself with some real estate, which may, become a diversification strategy for them. By the same token, I also think if the crypto and stock market continue to take a beating throughout the rest of the year and we're just on a downward trend, then a lot of those people may, continue to play that market because they may be a little hesitant to cash out. And, it's going to be interesting. But that's something I would definitely keep an eye out this year. And my last wild card, right, is what I like to call the Black Swan, right? And I don't like to call it. I actually got this from the book The Black Swan, which I have been listening to on an audiobook. And, a Black Swan is just an event that, a lot of people did not see coming. And I think it's something we got to keep an eye on. Some black swans that I'm kind of keeping an eye on this year are, for example, the United States relationship with China, right? I know this is big, and this could, we could talk about that for hours, but, the big thing being China's hosting the Olympics this year. A lot of people, a lot of the stuff that I've read has said, for example, that China and the U.S. are playing nice, but what ends up happening after the Olympics if they don't play nice and things kind of, start to go south, that could affect our supply chains, that affects our economies, that could affect a lot of different things. The next thing, for example, is natural disasters, right? One thing, for example, is we have a massive supply chain issues. We've had a lot of problems, even delivering homes in this market. Imagine if, for example, Miami, which is very susceptible to hurricanes, was to suffer a hurricane that required a lot of rebuilding. We would have a hard time bringing all those homes back up to shape and getting them rehabilitated with this supply chain crisis. And with that said, I hope you really appreciated our projections for 2022. If you guys have any comments on anything that I said, if you have your own ideas, your own projections, what you think is going to happen, leave a comment below. I'm very interested in having a dialogue. Who knows what can happen? And it's very important for us to have a dialogue, because maybe there's something you're seeing in your market that I'm not seeing in mine, and I would love to have a conversation. So please feel free to leave comments below. And until the next video, thank you guys for tuning in.